Hey traders, Raghee here, and in this free video I'm going to walk you through a question that we had going into the latter half of the day and a little bit of a how-to on how to day trade the afternoon, but specifically how to day trade after dramatic moves. So we saw a pretty dramatic move as the market sort of redigested the Bullard comments on from What Wharton Radio, and then also had to suddenly digest the news that the Chinese were in fact not going to Montana, thus pretty much evaporating all hopes of even a small sort of agreement to buy more eggs in the U.S. Chinese are going back home. Markets basically sold off on that. And of course, we know that's probably going to prompt a whole new series of potential tariffs and the ratcheting of the trade war, which I think all from a timing perspective work out really good for some of the shorts that we're looking at. We'll dive into those a little bit more in the premium video. But here in the free video, I'm going to talk about a little tool that we use called hourly price movement ranges. And it worked on the S&P pretty nicely, and it worked on the NASDAQ really nicely too. So we get this big sell-off, and the market crushes the typical price movement ranges that we would see between 1 to 2 p.m. Remember, these are hourly price movement ranges. What these are calculations based upon the historical price movement range for any number of, it's really for anything. I have these calculated for indices, for commodities, for individual stocks and ETFs. So ultimately what we have is every hour, there's a low, average, and a high probability for how many points we could move for that hour. And we get this information straight from AutoChartist. So this is a service that I've personally used, been involved with for many, many, many years. And we look at this kind of data. Well, this just gives me an idea of how many points we could move depending upon the time of day. And I'll tell you what, it's one of those tools that really is so elegantly simple, and yet one of those things that there isn't any real measurement for. This is not average true range. It's, to me, average true range is more awesome cousin. So based on the time of day, we have an expectation of how much we could move. So then we take this data and then we transfer it to the charts. And it's calculated based on the highs and lows of each hour, so you can project a high and project a low. So let's talk about these projections into the latter half of today. So I'm going to talk about just a couple hours here, the last 2 hours of the day, 2 to 3, 3 to 4. And notice that here's the upper end projection, and that's actually projected the moment we have a new low for the hour. As soon as that low is in, and it will adapt accordingly, we know that that level is the resistance level. So, and once we know the high, we can project the low. So it's almost like mocking out what the hourly price candle would look like. So what it ends up doing is giving us potential exhaustion levels. So this would be resistance and this would be support. Now, some folks, I think, tend to want to do this kind of stuff, which is fine. I think that's fine. But I think that most traders, their mental transmission doesn't go from drive to reverse that well. In other words, I think most traders do not do well buying and selling, buying and selling. Some do, some don't. I like to have a directional bias. It allows me to make bigger bets and more confident bets. So what I do is once we sold off, notice that we were trading below the anchored volume weighted average price cluster, the trio of volume weighted average prices that I use. We're below those, so I have bearish bias. In fact, we've been below those all day, and so it's much easier to be a bear, be a seller in that environment. So we get rejected from that level early on in the day, and we're well below it. We get the bad news about the Chinese in Montana, and then all of a sudden we know that as long as we're still below this, short, right? Now, obviously, you can take profit at levels like this, no doubt. So this is going to be support, and these could essentially be your targets. So this is one of the tools that I use as a trader. This is a tool that what's known as the volatility analysis from AutoChartist is something we use in the room each and every day, especially during the fall trading months, volatility analysis. So think about how you're projecting what the probability of price movement from hour to hour may be, and then how that could actually factor into your decisions about entries and exits. And that's something I'd love for you to consider. How are you measuring that right now? And if you could, what would you do with it? This is how I use that kind of information. We'll talk more about this in upcoming free videos. But in the meanwhile, just kind of introducing the concept, and I'll see you in the next update.